Good afternoon, everybody. Thank you for tuning in. Thank you for watching. I am Rob Johnson, Director of Partnerships here at New Frontier Action Fund. Why do we exist? We exist because we are an advocacy organization that seeks to help bridge the gap when it comes to voices who are not heard all the time in our political, economic, and social systems. So, we exist because our job is to make sure that people's voices are heard when it comes to economics, when it comes to social justice, when it comes to teachers, when it comes to racial and radical ideas that may seem radical, but in all reality, it's really just good public policy. So we're here today because, like on almost every Thursday, we've brought to you some informational type of stuff that I believe should be pretty helpful on how we move forward with people's finances. And of course, without further ado, allow me to bring forth the money man himself, the man, the legend himself, my good friend, Mr. Stoy Hall, CFP, owner of Black Mammoth. And so, first of all, Stoy, welcome back.
I appreciate it. Appreciate it.
Welcome back. I feel like when we get on here, I'm acting like I'm like welcoming you to something after we just got done talking crap about each other behind closed doors. It's kind of funny.
It is. It is.
Hey, but we must remain professional in all that we do, so that people know that we are serious. I am actually on Facebook right now this conversation, sharing this conversation with all of our groups, so that people know that we are live right now. Please, for those who are on, please go ahead on and share, share, share. The only way we can make this thing successful is if you share the content. I saw a TikTok the other day. That my girl sent me a story. It said, "Hey, why aren't you famous yet?" And the person responded, "Because you haven't shared my stuff yet."
Ah. I like that one.
Yeah.
I
So,
like that one.
so when are you gonna share it? Is the question,
Right?
right? When are you
Yeah.
gonna share it? So, my man. So, I'm sitting comfy. I'm at my sister's house, sitting comfy, getting, as we get ready to talk about this. But this is really not necessarily a comfortable conversation all the time, right? When people are struggling with money, bills are due. We just looked. It looks like close to 4 million people will be in the poverty line again come March 1st, and so it's going to be a crazy, crazy time as time goes on. But I know last time we spoke, we were talking about the whole GameStop situation, all of the stuff that took place there, and why it was important for people to pay attention, why Reddick and Robin Hood were now in front of congressional members testifying on what happened, on what took place, and how to protect people. And because there was some regular folks who lost thousands of dollars due to that whole ordeal. But we are super glad to have you here today, my man. We're Tell us what we're talking about today.
Today's a fun one for us. Is understanding a market correction, right?
Uh oh.
Um, and figuring out, hey, market corrections are good.
Yeah.
Corrections are good. It's when everyone thinks of a market correction, we think of what? We think of a collapse, right? That's what
Yes.
we think of. We think of the end of the world type of scenario, but that's not what a correction is. So to get out the terms of a correction and some call a collapse, they're different, right?
Yeah.
Correction is anywhere between 10 and 15% of the market going down. A collapse is when it goes greater than 20, right? A crash, collapse, those types of things. That's when, like, we as professionals look at the market and say, okay, it's gone down 10, 15. This is more of a correction. Or is it going 20 plus? Now we're in a crash scenario. And they have two different feelings and two different uses in them.
Now, Stoic, why would I care about a market correction if none of my stocks would be affected?
Well, good luck. They're all going to be affected, but you should care for a couple of reasons. One, anyone's money, when we're dealing with money, you can't keep making money forever. It can't keep going up no matter what, day after day after day after day. And I use this analogy very well because it's tax time, right? We're going to get our tax returns. Well, some people are. I won't, you won't. But a lot of people are going to get money. Guess what they do? They're going to take that money. They're going to go buy something that they didn't usually buy, right? Whether that's getting a tattoo, a car, shoes, whatever, right?
Mm-hmm.
If you were on the terms of a market that keeps going up, you would just keep investing that money, right? But you're going to
Mm-hmm.
take some of your profit now and you're going to go do and buy what you want to do with it, right? That's what a market correction in terms is in that same analogy. The market needs to take its profit, reset a little bit, catch its breath before it goes on another sprint, right? So I use that analogy a lot. And then I obviously use, when you work out too, you can't keep going up and up and up. You can't keep running faster and faster and faster. You got to take a breath. And that's what a market correction is. It's a breath for the market to continue to go higher.
I like that analogy. You're so right. Like, when I ran track, I was pretty fast. Obviously, not so much anymore. But when I did, I was pretty fast. I ran the 100, the 200. I was quick. I was all state, but I couldn't get faster. It was there was a limit to my potential
Mhm.
if I could get any faster, right? And I saw guys run the 110.2 and 10.5, and the fastest I've ever did it was 10.7, and I had the wind behind me, right? And so I was like, man, but I couldn't get to the 10.6, to the 10.5, to the 10.2, to the 10.3, right?
Mhm.
I just couldn't go any faster, no matter how much I even trained with techniques, right? And so I love that. I love that analogy. Yeah, that's a really good analogy. Market
Mhm.
correction. So market crash. Help me. So I always like to use the terms of like a market tornado or a market hurricane. Like, granted, tornadoes are still bad, but tornadoes really come in and they stretch about anywhere between 0 to maybe 10 miles. And it's taking out that much space, right? Now,
Mhm.
when there are multiple tornadoes, they do a lot of damage, but just one tornado will do damage in its small space, and then it goes back.
Mhm.
A hurricane, however, can wipe out an entire state plus half the country.
Right.
Plus half the country, right? God bless anybody who's lived through either one of those, either one of those things, because that's not easy at all. Uh, but there's a difference. So a market hurricane is getting ready to wipe everything out. Market tornado will maybe take a sector or a section of the market out. But in a crash, we're looking at a market hurricane, right?
Yeah, yeah. And the analogy I'll run with the track in a market correction, right? You're running really, 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 really fast. You take a break, pause, gather yourself, and run again. In a market crash, you're running so fast that you get ahead of yourself and your momentum's forward. What happens? You're gonna fall on your face, and that's what happens, right? We get going too fast, we crash, and now we got scuff marks on our face and we're in pain, and that's more of a market crash because it takes out everything and it hurts, and you can really, really feel that. The market correction is you taking a break, having a breath, regathering yourself, rehydrating, getting some Gatorade to run again.
Yeah.
And that's the analogy that we use. But you're right, it is market hurricane is a crash, right? Pandemic. March 23rd was the bottom of the last one, and that was a market crash because it went 30%, right? Not a market correction, which our market needs to have. And it's important for people to understand that is because we've got cash on the sidelines, right? Even with our investors right now, we've got cash on the sidelines waiting for a correction. And that's a very good opportunity to get back in and buy some stocks that are cheaper because now they've taken that correction, that 10, 15%, depending on the sector. And then now they're ready to keep going and marching forward.
Who loses the most money in market correction?
People who sell, right? Ultimately, the people who sell. But in market corrections, who loses the most money is anyone who freaks out about that particular stock or if they go bankrupt. So in some corrections, you're going to have some of these smaller companies that can't support what's happening, right?
Mm-hmm.
So they'll go bankrupt. In a crash, just like you said, instead of being a sector, now it's a very bigger reach. Now we have multiple companies that are going bankrupt, multiple people that are taking out their profits or just selling off really, really fast, and now everyone's losing. So in a correction, it's those people that don't have long-term visions and start to freak out, or are part of those companies that go bankrupt. And then in a crash, really, it's a bigger connection. There's a lot more that's happening as opposed to just a couple sectors.
Okay. All right, Story, we got 10 minutes left on people's lunch break. Are
Yep.
you a fiduciary?
I am.
What does that mean?
It means I'm legally bound to do what's in your best interest, Rob.
How can I believe that? How do I know that?
How you know that? You can go look up the legal definition of it. You know that by the licensing that we have. CFPs, we are that way, as well as Series 65 or 66 individuals. And to figure that out, it's very easy. Go to finra.com/brokercheck. Type
Spell
in
that
your.
out.
What's it again?
Spell that out for me. FI.
FINRA.com/brokercheck. You go up there, you type in my name or whoever advisor's name, you're going to be able to see their licensing, how long they've been in the industry, as well as any red flags, if they've gotten sued or anything. It's all there. And it's very interesting information to figure out.
Listen, he really just dropped a jewel on y'all with that one. A lot of people don't know. Like, if you really want to check out your financial advisor and you really want to figure out what they're about, if they've been involved in any scams or schemes or pirates or what's the other one? Pyramid schemes, all of that. So if you ever want to know if there's anything about that, go to finra.com/brokercheck. And I'm telling you guys, it's an amazing tool to use to make sure that you're not getting dragged by somebody who you believed was acting in your best interest. Again, please make sure you check out anybody who is going to be brokercheck.finra.org is what Mark is saying. brokercheck.finra.org. Yeah, so please make sure that you are checking the people out that you are giving money to. Don't, I'm sure Story has some stories of some folks who've come to him. But even we've dealt with people like this. Unfortunately, everybody's not acting in your best interest, even though they say that they may be. So please, he just dropped a jewel on you for that one. Story. So there's this thing online that says questions that I should ask my broker. You down to do this?
I am down to do this.
All right, let's see here. Questions. All right, it says here 10 questions that I should ask my advisor. All right, question number 2. How do brokers get paid?
How do brokers get paid? There's really two, I guess, to simplify it, there's 2 ways that brokers get paid or advisors get paid. One being commissions from a TD Ameritrade, a Fidelity, or an insurance company. So how that works is you, client, invest in some mutual fund or whatever it is that your advisor tells you to get into, and then that company or that broker, whether it's TD Ameritrade or Fidelity or whatever, then pays a commission to the advisor for putting you in that fund or whatever it is. Okay, that is a non-fiduciary way of doing it. Those are called commission-based. Or you have fee-based. We are fee-based. I believe in fee-based because it's fiduciary. And Rob, if you were to work with me, you pay me directly, right, for making your financial decisions. Not, I don't get paid by TD Ameritrade or whatever. We have an agreement that you pay me X to make those decisions, not a company paying me to make decisions for you.
So I can either pay a commission to a broker or I can get a fee-based advisor, which usually are fiduciaries.
Correct.
Are there any fee-based advisors that aren't fiduciaries?
There are. There's a combination. You can be a commission and fee-based and do both, right? Depending on the scenario or whatnot. You can take a commission or you can be fee-based. The fee only people, I know there's a lot of different terms. Granted, people, I get it. Our industry's crazy with terms, but fee only meaning they don't take commission at all across the board, right? It's only direct. There is no opportunity for them to go, hey, yeah, I'll take a commission on that. No, it's the client pays you. That's it. Solely that is it.
Mm. All right, we got 3 minutes left on people's lunch break, so we can get them some time to eat. Tell me exactly what are some of the costs that people should be prepared for when it comes to working with a financial advisor. Because let's face it, it's not free to have a financial advisor,
Oh
right?
no, it is
Some
not.
Yeah, somebody is there watching the money, and you have to pay them for their time. What are some
Right.
of the costs people should be aware
There are a couple of main costs, and it depends on who you work with and what goes on. One, you're going to have your direct costs with them, especially if they're fiduciary, right? And that's going to come up of an AUM charge, so just on your investments, or like we do, you can pay us monthly, right, and have a monthly retainer. You also can have an upfront charge in regards to developing your plan and your investment plan. So those are the initial charges that you're going to get from an advisor. If they are commission based, every product that they put you in most likely is going to have some percentage tied to it as well, right? So a mutual fund, a bond, or etc. There's going to be fees on top of that that gets paid to them. And then also internally inside of that, they're called operating expenses. That's also going to be inside of those commission products as well. Okay. Another one that you really need to look out for is just those operating expenses, even inside your 401ks, inside of everything. You're going to see what's called an expense ratio. That expense ratio are fees inside of whatever fund you're dealing with that you're paying for that you probably don't even know you're paying for. And those
of.
can end up, I've seen those go from 0.1% to over 2% without people really understanding that it costs that much to be in that investment. And so those are the things that usually trip people up. And when we see a portfolio, I attack immediately is that expense ratio, because that's money out the gate that people don't know about. And that's how we even initially save people money, is reducing those expense ratios or getting rid of them entirely.
Story, final thoughts.
Final thoughts. Gear up for a correction. A correction will be coming. Don't be afraid of it. Corrections are really good. That's how you can even get ahead and make more money. I would say, hey, let's gather some cash, get ready to do so. And when it happens, you'll know, obviously, and I'll tell you. But gear up for that. The other thing is I really want more people to go to BrokerCheck. Go to brokercheck.finra.org. Look up me, look up everybody, and get familiar while you're interviewing these advisors and planners. You can even go as far as if they have a DUI, all of those things. So if you have a need or a want that you want to work with a certain somebody who doesn't have a lot of baggage, you'll be able to figure those out. So truly go on to that, search it, look up people, and get a feel before you hire that advisor.
My man, Story Hall from Black Mammoth. Thank you so much, my good friend, and I'll see you next week, brother.
All right, brother. Have a good time.
See you. Hey, everybody, thanks so much for joining. I'm Rev Rob Johnson, and as always, in order to continue to bring you these types of programs, I need you to go to newfrontieraction.com. Let me pause for a second. Newfrontieraction.com is where I need you to go, because guess what? We can't continue to do this without your support, without your help, and we need you to get involved and get with us on this. So again, go to newfrontieraction.com, make a donation today, sign up for our email list. There's a lot that's happening right now in the state of Iowa, Utah, Missouri, Arizona, North Carolina, all over. And we are on the front lines trying to help make sure that this stuff don't get passed through when it comes to policy stuff. Today we talked about money. Don't forget, a market correction just may be on the way. So if you have cash on the sideline, hold on to it just for a little while, because if those stocks go down, then you'll have the opportunity to jump in and buy them while they're low and then ride the wave up. Again, I'm Rev Rob Johnson from the New Frontier Action Team, and we look forward to seeing you next time. Take care.